Get paid to own stocks. In this episode of the Quiet Wealth series, we explain why dividends matter and how they quietly build long-term wealth. For many people, investing is framed as buying shares, watching prices move, and hoping to sell at the right time. Success depends on timing, patience, and emotional control, which is why investing often feels stressful instead of strategic. Every decision feels high stakes, and every market swing feels personal. There is another way to think about investing. A way that removes much of that pressure and replaces it with structure. A way that shifts the focus from prediction to ownership. Some companies share a portion of their profits with shareholders. These payments are called dividends. When you own dividend-paying stocks, you receive income simply for holding the investment. You are no longer waiting years for a payoff. You are being compensated along the way. This changes the dynamic entirely. Instead of relying on selling at the right moment, the investment begins working for you immediately. Ownership becomes active, not passive. You are not just holding shares. You are holding an income-producing asset. Dividends are rooted in business fundamentals. They are paid from revenue and cash flow, not headlines or hype. This directs attention away from daily price movement and toward the strength of the underlying company. It encourages investors to think like owners rather than traders. Markets are unpredictable. Prices rise, fall, and sometimes stagnate for long periods. Even strong companies can experience volatility. Dividend investors continue receiving income through all of it, which reduces dependence on perfect market timing. Over long periods, dividends have made up a meaningful share of total market returns. Many investors underestimate this because dividends do not create excitement. They do not generate buzz. But they quietly compound value year after year. One of the key advantages of dividends is cash flow. Income arrives without requiring the sale of assets. This lowers pressure and helps investors remain composed during market downturns. Instead of reacting emotionally, they can stay focused on long-term goals. Cash flow also creates choice. Dividends can be reinvested to increase ownership, saved to build reserves, or used to support expenses. The investor decides how that capital is used, rather than being forced to sell during unfavorable conditions. Reinvestment strengthens this strategy significantly. When dividends purchase additional shares, those shares generate future income of their own. Over time, ownership grows organically, even without adding new money. Compounding often feels slow in the early stages. Progress can seem modest, almost unnoticeable. But time amplifies consistent action. What starts quietly can become powerful when given enough years to work. Companies that maintain dividends over long periods often operate with financial discipline. Regular payouts require steady earnings and responsible capital management. This can lead to stronger balance sheets and more resilient business models. That said, dividend investing still requires judgment. High yields can be misleading. Extremely large payouts may signal financial strain, declining businesses, or unsustainable practices. A stronger approach prioritizes reliability over size. Consistent earnings, healthy cash flow, and a proven dividend history matter more than headline numbers. Stability compounds better than risk. Dividend investing also influences behavior. Knowing that income continues to arrive helps investors stay rational during volatility. It reduces the urge to panic sell, chase trends, or react to short-term noise. This approach works across life stages. Some investors focus on reinvestment and long-term growth. Others value income stability. The same framework adapts as priorities change over time. The mindset behind dividend investing is different. Instead of asking how fast a stock might rise, the focus is on what the business can deliver consistently. The goal is durability, not excitement. Markets will always fluctuate. News cycles will always create noise. Dividend investing provides a stable foundation in an environment that rarely feels calm. If this perspective is adding value, take a moment to like this video, subscribe to the channel, and turn on notifications so you don't miss future episodes. And let me know in the comments. Do you reinvest your dividends, or do you use them as income? Getting paid to own stocks is not about shortcuts or hype. It is about structure. It is about building a system that rewards ownership, patience, and long-term thinking. Dividends do not promise instant results. They reward consistency.